Is it? You cannot see in the first year it will be 2018, there will be a loss. In 2019 there will be a gain. Is that we have to make sure that whenever we are posting it in the financial statement, we have to start with the debits and credits. Okay, when there is a loss, it is a debit all expenses and losses, fine, credit all incomes and gains. That's as simple as that. Is that nominal account? When we are doing it on the basis of the non-current assets, we will take that into consideration. Sometimes what will happen, there are two conditions. Is that sometimes the events anticipate to cause impairment. As the asset turn out better than predicted, sometimes what will happen, see, the old asset is more efficient than the new one. Why you will wish to reduce the value? No, it's not happens. Is that old asset is more, we are not getting that much technology. Is it? I see what happens during COVID. Very simple, take the example, you can understand from this. During the COVID, what happened? Car manufacturers got delayed. Is it right? Then what will happen? People retain the old cars. Is it right? They have the new cars purchases which has not been as per expectations. If that is the case, definitely we will take the old asset into consideration rather than new asset. If this happens, recoverable amount is recalculated. We are recalculating the recoverable amount, and if there is any plus or minus, is it right? If any plus or minus, we will get it reversed. Is it right? Very interesting. The reversal is recognized immediately. Got me in the statement of profit and loss account. Well, got my point? It is going to be recognized immediately in the what we are doing. We are talking in terms of what? In terms of financial statements. Is that we are taking into consideration in terms of what? In terms of financial statements as such. Is that immediately if the impairment is charged against the revaluation surplus, we should take the same account where we have debited and credited. We should not take any other account. Okay, we should never ever take any other account. The reversal is recognized as what? As a other comprehensive income. This is not a regular income, is it right? This is not, whenever we say other comprehensive income, it is sub income that is not generated from the regular trading activities as such. This is the first point. So what is the second point? The reversal must not increase the value. What we have done, see, carrying amount is how much? Carrying amount is how much? Carrying amount is 20,000. Is it right? Carrying amount is 20,000. Now the revaluation amount is right, very important. Put star mark here. The revaluation amount is it right, should be equal to or less than how much? 20,000. Is that revaluation should not be more than 20,000 as such. Is that if it should not, the value of the asset above its depreciate, but it must not increase the value of asset more than the depreciated original cost. You cannot say that yes, value is 20,000, I am making it 21,000. No, because always depreciation maximum, that is the cutoff point which we are going to take into consideration. Fine. This is where we are talking about the reverse. Again, I am just putting it. The value of the asset will increase or the value of the asset will decrease. If the fair value or value in use is going to be decreased, it is going to be called as a impairment loss. In some cases, in some instances, the value of the asset will increase also. If it is increasing, definitely we have to reverse the entry which we have passed the early. Is it? In the same way we should not touch other accounts. We have to touch the specific accounts only. Fine. Now you will have some more detailed example as such. Is that what they are saying? They are talking in terms of on January 1st, this is right, 2003, is that on January 1st 2003, 1st January 2003, is that they have entity purchased a machinery, is it right, They have purchased how much? The cost is how much? 24,000. Is it right? The machine is depreciated on a straight line basis. What is the life? Life is how much? Life is going to be 8 years. With no residual value. Is it right? There is no residual value. RV is nothing but residual value. Scrap value or residual value. Okay. Now this is the first point. Is it right? Next, on 31st December. Is it right? 2004. Is that on 31st December 2004? How many years are there? Very important. How many years? It is 2 years. Is right? 2003 and 2004. There is an impairment. Is it right? The machine is impaired by how much? The machine is impaired by how much? 4,500. Is it right? With no change in the estimated useful life, or is it? The life is same. The residual value is also same. Okay. Next, see the thing. See the changes that happening. 31st December 2006. Is it right? Again after how many years? Again after 2 years. Okay. Again after how many years? Again after 2 years. The conditions which caused the impairment have reversed, and the recoverable amount is how much? The recoverable amount is how much? The recoverable amount is 16,000. Is it right? Got my point? Now you see the thing. After 2 years, the value has been decreased, and after 2 years, the value has been increased as such. Is it right? The value has been increased. Now we have to make it accordingly. We have to work it out. Fine. I want to increase the thickness. Is it right? Fine. Now take as a solution. Is it right? Take as a solution. Is that first what we have to do? Calculation of, see, is it right? Calculation of carrying amount. Is that calculation of carrying amount as on 31st December 2006. Is that we want to know what is the carrying amount as on 31st December 2006. Okay. First, what you have to do? You have to take the cost. Is it right? Cash cost as on. Is it right? 1st January 2004. How much is the cost? Cost is 24,000. Keep calculating. You should have to write. I am saying this. I am writing it. You should write. That's very important. And your calculator has to be there in front of you. Is it right? Your calculator has to be there. Immediately you have to tell me what is the answer, what is the value. Okay, whatever you say. Now, first what you have to do? Depreciation. Is it right? Less. Is that depreciation for how many years? For 2 years. Is that because what happening from? Is it right? I will write for you also. 1/1/2004 to 31st December 1/1/2004. Is it right? 1/1/2004. Sorry, it's not 1/1/2004. Is it right? It is 1/1/2003. Is it right? 1/1/2003 to 31st December 2004. How much it is? It comes to how much? It comes to how much? It comes to 24,000 into how much? 2 divided by 8. Is it right? 2 years. How much it will come?
6,000.
6,000.
6,000.
Okay, 6,000. How much is there? 18,000. Fine. This is as on 31st December 2004. Fine. As on 31st December 2004. Now, what they have said, as on 31st December, how much is the impairment? Is it right? As per 31st December, what is the impairment? Impairment is there somewhere here. Is it right? How much is the impairment? Less. Is it right? Less impairment. Is it right? Less impairment. How much is the impairment as on 31st December 2004? As on 31st December, how much is it? 4,500. Is it right? 4,500. It comes to how much? 13,500. Is it right? This is the recoverable amount. This is the recoverable amount as such. Now, then again, what happens? What is the carrying amount on recoverable amount? Is that 4,500? Now, fine. Now, again we have to calculate depreciation. Is it that? Again we have to calculate depreciation. Depreciation less. Depreciation from when? Depreciation from 1/1/2005 to 31st December 2006. Again for 2 years. Is it right? Again for 2 years. How much? 13,000. We have to calculate on the current value. Is it right? Into, they have not changed anything. Is it right? They have not changed anything as such. Is it right? Is it right? Now, how many years are left over is there? Is it 2 divided by, how many years we have to take as a denominator?
8 years.
2 by 8. Life is how much? 1/1/2003 is 1,000, 2003 is how many years? 8 years. Is it right? On 31st December 2004 is how much? It is going to be how many? 6 years. Is that from 31st December 2004, is it right, to 31st December 2006? How many years? 2 years. How many years is left over? 6 years. When we are taking the recoverable amount, is it right? When we are taking the recoverable amount, we have to take into consideration recoverable life, okay? Remaining life. Is it right? Remaining life. Remaining life is how much? 8 minus 2, 6 years. How much will get?
4,500.
4,500. If you take into consideration, it comes to how much? 9,000. Okay? It comes into consideration. See, I just, because I have written something here, I just want to show that you should not get confused. This is 13,000, this is 4,500, and this is what? This is the 9,000. Fine? This is the 9,000. Got my point? This is what happens. This is what it says. It is nothing but the carrying. It is nothing but the carrying amount. Carrying amount as on 31st December 2006. Is it? Carrying amount is how much? Now, is it okay? Now, how much is the cost? Cost is see the thing. Is that this is this, you put it as, you put this as a step 1. Okay? You put this as a step 1. You put it as a step 2. Is it right? Now, what it says, what is the cost? Cost is how much? Cost as on 1 January 2003, it is how much? 24,000. Fine. Less. Is it right? Less cost. Depreciation. What? Sorry. Less depreciation. Depreciation as till. Is it right? Till 31st December 2006. Is it right? 24,000 into 4 by 8. How much we'll get?
$12,000.
12,000. Is it right? Now, this is 12,000. Is it right? This is 12,000. Now, what we have to write? This is nothing but the, I'll take another one. Is it right? This is nothing but, this is the carrying amount. Carrying amount as on 31st December 2006. Is it right? What they are asking is, how will this be reflected in the balance sheet? Is that in the balance sheet? How much you have to show? We have to show it how much depreciation. We have already calculated. We cannot reverse it. Is that depreciation? We cannot reverse it. Is that 3,500? First year we have done for 6,000. The second time we have done for 4,500. Okay, that is the depreciation done for that. Now, when we make it a point, it should that the value has to be shown in how much in the financial statements. The value has to be shown as a 12,000. It is not be, see now you see, check again the what is the condition. It should not be more than 24,000. Fine, it should not be more than 24,000. The condition, the one and only condition is it has to be less than 24,000. How much is the value? It is 12,000. Again I will repeat. Very simple. See, you have to see very technically you have to follow. That's all. Is that very technically? First you have the cost 24,000. You deduct the depreciation for 2 years. It will get how much? The value as on 2004. Again there is a, on 2004 December there is a impairment loss. Fine, reduce it, 13,500. Next, one revised value, recoverable amount. Is that on 13,500 you calculate the depreciation. How much you get? 4,500 for 2 years. Is it right? Now that is the value 9,000. But what happens as on 31st December, they have again done this calculation. If that is the case, take the cost 24,000, depreciation for 4 years 12,000. What is the actual carrying amount you are getting? 12. Means when you do the things, is that carrying amount is how much? 9,000 as per the books. Is it right? As per the books is how much? It is 9,000. But as per the revaluation is how much carrying amount? Carrying amount is it right? Keep this in mind. Means what we have to do? We have to segregate it, and accordingly we have to work out the things as such. Are you clear about this? Is it clear? Is it okay?
Yes, it's clear. I have one question.
Tell me, please.
The recoverable amount 16,000. We will not use 16,000.
No, we will not take. Is it? The recoverable amount is how much? 16,000. Is it right? Now you see the things. How much we have calculated? We calculated 12,000. Is it right? When we do the things, there is a increase in value. Is that the amount which we have been calculated is how much? 12,000. Is it right? The carrying amount is how much? 12,000. The recoverable amount is how much? 16,000. But recoverable amount, is it right? Recoverable amount is 2006. Are we taking for? They will give you the carrying amount. They will give you the fair value. They will give the recoverable amount. If recoverable amount is there, I will go with you only. Okay, just I will do this for your understanding. Is that in the box? Is that the recoverable amount is how much? The recoverable amount is 16,000. Fine. The carrying value is how much? The carrying value is how much? Carrying value is 12,000. Is it right? If you take into consideration the 4,000 is going to be what? it is going to be a revaluation gain. Is that it is going to be revaluation gain asset. If we are going, this is as on 31st December 2006. Okay. If they ask, now I will come to your question. If they asked for next year, is it right? If they asked for next year, then what we have to do? We have to calculate depreciation on, we have to calculate depreciation on this amount. Is that? Is that? Now, how much we have, as of today, is that? What is the carrying amount? See, carrying amount is how much? Assume 1 minute. Carrying amount is how much? This is A. Is it right? This is B. Is it? This is A and this is B. Fine. Now, what is, if you take into consideration revaluation gain as on 31st December 2006 is nothing but B minus A. Okay, B minus A, 12,000 minus 9,000. It comes to how much? It comes to 3,000. This has to be what we have to do? Credit to what? Credit to income statement as other comprehensive income. Is it okay?
Yes, it's okay.
Okay. Is it? That's the basic thing which you have to carry out. Fine. Now, what we have done till now, we have done with respect to the carrying amount. Wait, once this is done, we will do exercise more. See, till now, where we got understanding? We got understanding about the carrying amount. We got understanding about the value in use. We got understanding with respect to the fair value. Is it right? Sale value. And there is a impairment loss as well as impairment gain. Okay. This much we have done over a period of time as such. Got my point? Now, what is there is one specific one. Is it a CGU, cash generating units? Smallest identified group of assets. Is it a generate cash inflows independent of other assets? I told you yesterday. Is that what is cash generated asset? You will have, assume, you will have one place. I am not talking about branches. One place you are selling products. Is it right? You are selling products. Assume, very clearly assume you have a cold stone. Is it right? Cold stone, what they will say? They will sell the ice creams as well as they will sell the cakes also. Fine? Cold stone. Now, what happens? Ice creams goes fast. Is it right? People will buy more ice cream. But cakes, the ice cream cakes go little bit slow. Okay. Now, when you do the things, what is the cash generated units for the cold stone? Cash generated units is the ice creams. Is it right? That is the smallest. Again, we have to make which type of ice creams will be sold. You have different sizes. Is it right? I will see, very simple. You understand this, you will understand every other thing as such. Is it right? Now, what is it right? Very simple. Where is that? Fine. Is it right? See the thing. What you are doing? What is cash generated unit? Cold stone will sell ice creams. Is it right? Cold stone will sell ice creams. Cold stone will also sell ice cream cakes. Is it right? Ice cream cakes. Now in the ice cream, what happens? You will have different sizes. Where is it right? You have small size, you have medium size, you have a large size. Okay. Now, usually we assume that the small size the people will demand more. Large size people will demand less. Is that if that is the case, this division is called as a cash generated unit because it contributes more to the revenue. Is that the contribution? Is that the contribution is more towards revenue? Is that towards revenue? This concept is called as a cash generating units. Okay. Smallest identifiable group of assets which generate cash inflow independent of other assets. We are not talking about the cakes, we are not talking about the medium size, large size, other things as such. Isn't it? That is what it says. Carrying amount of about the cash generated units of all the assets to be combined. We have to take into account why we are doing this. The reason. If there is a impairment loss, is that how you have to distribute that impairment loss? That is very important. Is it right? How we have to distribute that impairment loss as such. Is it right? That's the very important. You cannot say that impairment loss is for small, medium, large cakes. We cannot push it on the cakes. We cannot push it on the large one. You have to distribute it as per the value. That is the purpose of learning this concept. Recoverable amount, recoverable amount of all the assets which have been combined. Fine. We will take this into consideration. What it says, a cash generated unit is the smallest identifiable group of assets for which the independent cash flows are identifiable. For example, they have taken the college. Is it right? Independent cash flow are not identified for each piece of furniture. Is it right? We cannot say that for each smallest identity. You cannot go for, if you take the ice creams, you cannot go for flavors. Okay, very simple. You cannot go for flavors. You have to go for the small, medium, and large. That's all. Or maybe even for all the furniture within classroom. It is necessary to combine all the assets at a particular location. Is it? And to identify the independent cash flows. What is the impairment? Is it got my point? Means one location, what is the cash flow? Fine. The assets of the CGU are grouped together into a combined value, total value of the assets. Is it right? And we will also take into consideration what is the recoverable amount. Impairment exists when the carrying amount is as the same rule. Is it right? Carrying amount is greater than the recoverable amount. Recoverable amount will be less, carrying amount will be more. Then automatically what will happen? The impairment loss. How we have to calculate it? The calculated total impairment needs to allocate against specific assets. Is that? Having impaired, specifically impaired item, whatever the value, whichever product the value is increased, you have to make it specific calculations. Is it right? But what you have to do in the following order? You have to take into consideration goodwill. Any idea about goodwill? Yes or no? Yes or no? Yes. Fast. Tell me. You don't know, you tell me, no, I am here. Yes, Rizwan and Shifa. Fast. Fine. Is it? What is the, how we'll do goodwill? Is it right? Next, after 1 or 2 weeks, we'll do. Is that the market value of shares, market value of equity shares, is it right? Minus book value. Is that the difference? Is that the difference? If the difference is positive, then it is called as a goodwill. Fine? It is called as a goodwill. What we are doing? See, what is the rule of intangible asset? Intangible asset is externally generated goodwill. We have to show it in the financial statement. Internally generated goodwill, we should not show in the in the financial statements. This is the externally generated. Retaining assets pro rata means as per the weights, okay, as per the value. Pro rata means as per the values reflected in the financial statements. You have to do accordingly. Note that no asset is to be written down below the recoverable amount. Is it? Now what happens? See the thing. You are having how much is 20,000. Is it right? You have to allocate this 20,000. You are allocating this 20,000 ABC. You are allocating is this 20,000. One asset is how much? One asset is 18,000. One asset okay, fine. One asset is going to be 20,000. One asset is going to be 22,000. Is it right? You have to pro rata means we have to take the weights. Now what is most important, we'll do this in the next slide, okay. What is more important is we have to apportion. Is it right? I am writing this. Is it 20,000 into what is the total? Total is how much? How much is the total? Fast. 1,6. Is it right? Is that 20,000 into 18 by 20? 20,000 into 20 by 60, sorry, 20 by 60, and 20,000 into 22 by 60. Okay, you have to proportional. That is the pro rata basis. Now we should not. Is it right? We should not make this negative value, any value, okay, any value as in means we should not go beyond 18,000. Is that? We should not go below 20,000. Means should not have a negative value, okay. We should have the positive value pro rata basis that has to be considered. Got my point? Just keep this in mind. The moment we are doing the question calculation, you will understand it. Again I am saying this just for your. What is the goodwill? Goodwill is nothing but the difference market value, price of market value of the equity shares minus the book value. Is that difference is positive? It is goodwill. Negative, I will tell you what will happen at the later stage. Then, if there is a loss, is it right? If there is a loss, what you have to do? We should not recover loss from one type of asset. We have to distribute the loss among the different types of all the available assets proportionately as per the weights as such. Okay, this is what it says. Now on that basis we are going to do this question as such. Fine, on that basis we are going to do this question. Are you clear about this? Can I start now? Fine. Is that what it says? What it says, they said that an entity operates. Is it right? An entity operates a unit comprising of the following assets. Is it right? Following assets. In that, what they have mentioned very clearly. Is it right? They said that machinery is how much? As on 30th of April 2007. Machinery is 500, goodwill is there, land and buildings is there, brand is there, is it right? Brand is there, other assets is there, and total is there. Fine. Now, if you take into consideration how much is there, the answer comes, the total comes to 2000. Fine. Now, remain on 30th April 2007, the following a period of adverse publicity, the company decided to scrap the brand. How much is the brand value? 300. Is it? When you are scrapping the brand, the value of the brand will become how much? 0. Fine. The value of the brand becomes how much? 0. Now, an impairment review was established, and the recoverable amount of the unit was how much? 1,170. Is that how much is the recoverable amount? 1017 1000. This is in thousands, is it right? This is in thousands. 1,170,000. The other net assets are stated at the recoverable amount. What they are asking us, they are asking you how will this impairment allocated, is right? How this impairment allocated among the different assets. Fine. How we have to allocate 300, is it right? How we have to allocate 300 among the different assets, as simple as that. Fine. Solution, is it right? You put it as a, write down, you also write down in your notebook, that's very very important, is it right? Particulars, you have carrying amount, you are writing Rizwan. Shifa, you are writing?
Yes, Mister.
Good. Is it right? Good. Is that, see that? Is that, see, fine? No. The moment you write, you don't need for revision also. You don't listen. This is okay? Okay, fine. You write like this in the, is it? Now, how much is the carrying amount? Carrying amount is missionaries, how much? Carrying amount of missionaries, how much? 500. Is it right? Carrying amount of machinery, how much? 500. Carrying amount is goodwill is how much? Carrying amount of goodwill is 180. Is it right? Carrying amount of land and buildings. Is it right? Carrying amount of land and buildings is how much? 900. Is it right? Now, what is the brand? Brand value will be how much? Brand value will be 0. Is it right? Brand value will be 0 as such. Okay? You will have other assets, other net assets. Is it right? Other net assets are how much? 120. Fine. How much you will get the total of this?
$1,700.
How much? 1,000. What they have mentioned that is at 1,700. Now, one minute, just I'm putting the one. How much is there? It is 700 minus 0, 530. Is it right? And 530 minus 300. I just want to make sure that how easy I can work it out. Okay, that's the only thing. Recoverable amount is 1,170. Fine. 1,170. 1 minute, just. I just did it. Fine, no problem. The recoverable amount is how much? The is it right? The carrying amount is is 1,7 in thousands. Is it right? The carrying amount is how much? 1,700, and the value in use, is it right? Value in use, one minute. It's just I want to make sure that how easy I can put it, that's all. $500, $900, $1,400, 120, is it right? 120, 500. The total other assets are stated at recoverable amount. Just fine. This is where it says, is it? The other assets are how much? The other assets, this is what it says, is right? This is where the other assets are stated at a recoverable amount. Means you should not change other assets, okay? We should not change. Other assets are how much? Other assets are 120. Fine. Other assets are how much? 120. We should not touch that one, okay? Now what we have to take into consideration? We have to take into consideration what? Land and buildings and machinery. Is it right? We cannot, is it? What is the land and buildings? Land and buildings is how much? Land and buildings is 900. 900. We have to take into consideration machinery. Is it right? Machinery is how much? 500. Is it? Machinery is how much? 500. Is that this means we can see other goodwill we cannot use, is that? Goodwill is it's not like we are having any physical substance, is that? Goodwill is a intangible assets. Fine. How much is there? 1,500 carrying amount this asset. Now in this we have to allocate it, is that? In this amount we have to make the allocation. Now what happens? How much is fine? This is the value on which it has to be based. This is the tangible value. Fine. This is the tangible value. 1 minute. Yes. 170 minus 120 minus 1,400. 1170. The total recoverable amount is how much? Is that? See the thing. Just I'm writing here. Okay, I'm writing here. Is that? See, total recoverable amount is how much? Total recoverable amount is 170. Okay, total. Now, other assets, other assets recoverable amount. Is it right? Other assets recoverable amount. We are removing that the other assets. Is it right? How much other assets? Other assets removal amount is 120,000. Is it right? 120,000. That is given in the table. Is it right? How much you will get? You will get this much. Is right? This is nothing but tangible assets. Is it right? Tangible assets excluding goodwill. Is it tangible assets exclude 1 minute 1170? Is it right? 1170. That impairment review as well, the recoverable amount of the unit. Is it right? Yes. This is the recoverable amount. Yes, done. This is the net recoverable amount. Net recoverable amount of assets. Is it? How much is there now? The carrying amount is how much? 1400. Is that the as per the book value? How much? Only for tangible assets is how much? 1400. How much is the net recoverable amount excluding other assets? It is 120. Fine. Now, how much is the impairment loss? See that thing. How much is the impairment loss? Is it? How much is the impairment loss? Is that? I will put like this. This is A, this is B. Okay, this is A and this is B. How much impairment loss? A minus B, it comes to how much? 350,000. It comes to how much? It comes to 350. Now this 350,000, is it right? This 350,000 has to be distributed. How we have to distribute this 350,000? Is it right? What is the value? 1400. Is it right? What is the value? It is there. It is 1400. Fine. In 1400, we have to take into consideration proportionately to the amount of how much is the machinery? 500. Is it right? How much is the machinery? Pro rata basis. Is it? Pro rata basis. Pro rata basis. Is it nothing but the what they say? They say it is a book value. Is it a book value times impairment loss? Is it right? Impairment loss divided by total tangible value. Okay, tangible value. Fine. Now we have to take into consideration what? We have to take into consideration only for land and buildings. Is it right? We have to take into consideration for only land and building. What is the land and buildings book value? How much is the land and buildings book value?
900.
900. Okay. How much is the 900? See, 900. What is the impairment loss? Impairment loss is how much? 350. Is it right? Impairment loss is how much? 350. Now, what is the tangible assets? Tangible assets are how much? Total tangible value is how much? 1400. It comes to how much?
225.
225. Okay. This we will take this. Next, in the similar case, we take the machinery. Is it right? We take the machinery. How much is the value of machinery? 500. Is it right? 500. 350 divided by 1400. It comes to how much? It comes to how much?
125.
125. 225 plus 125, how much? 350. If we are doing like this, then it is called as a pro rata basis. Is it right? It is called as a pro rata basis. Now just that's all. Is it right? That's the only thing. This is where we are now. We have to show it into a table. Is it right? We have to show it under the concept of table as such. Fine. Now what they are saying, an entity operates the things. The adverse publicity, the company decided to scrap the land. Impairment review established that the recoverable amount is how much? Recoverable amount is going to be 1170. Fine. Now how much we are going to say? See, this is what it says, 225 and 125. Is it right? To machinery, how much impairment is there? Machinery impairment is how much? Machinery impairment is 125. Is it right? Machinery impairment is 1. Land and buildings is how much? Land and buildings is how much? 225. Is it right? Land and buildings is how much? 225. Definitely. Other assets they have mentioned. Is it right? Other asset there is nothing is there. Is it right? Recoverable amount is how much? Recoverable amount is 120. Is that the value of the brand will not be there? Is it right? The value of the brand is not will be there. And now if there is a they have the adverse publicity, what will happen? Goodwill be there or goodwill not be there? Brand value is there. Is there 505? Okay, 500 is that column 1, column 2, column 3, column 4 is how much? Column 4 is column 3, column 2 minus is that column 4 is nothing but column 3 column 2 minus column 3. Is that how much is there? 500 minus 125. It comes to how much? It comes to 375. Is that? Now what happens? Goodwill. If there is any adverse publicity, automatically the value of goodwill, what will happen? There will be a complete impairment. Reduce it. How much is there? It will reduce to how much? It will reduce to 180. Will not adverse publicity. After adverse publicity, will not have any goodwill. Is it right? As simple as that. Is it? Will not have any goodwill. The recoverable amount of the goodwill will be how much? 0. How much is there? 900 minus 225. It comes to how much? 675. Brand value will be 0. Is it right? Brand value will be 0. And what is the other assets? Other assets are how much? They have mentioned other assets. Other assets are going to be how much? 120. What is the total value you will get here? 5, 5, 10, 1, 14, 15, 16, 17, 1170. This is the recoverable amount. It looks, see, till we don't reach the last stage, we will not understand. Is it right? Now what we have done, very simple. Is it right? What we have done. First, I will just make it a point. We have taken the carrying amount. They said that the value of the goodwill brand is 0. Fine. Total value we have excluded it. We got how much? We got 1700. This is a carrying amount. Now, what is the from where we are going. See, when there is no goodwill, definitely we cannot allocate on goodwill. Is it right? We cannot decrease the value of machinery, or we cannot decrease the value of land also straight away. We have to based on the individual values. Okay, that is the rule. Now we have taken the value of land, we have taken the value of buildings. Is it right? 1400. Then what we have taken? We have taken what is the actual recoverable amount. Is it right? 1170 minus we have taken out the other assets. How much is the loss? 350,000. This 350,000 should be allocated against what? Against the buildings, land and buildings and machinery. Pro rata basis. Is it? Pro rata basis means what is the formula for that? Book value into impairment loss divided by total tangible. Again I am writing, when we say total tangible assets, is it right? Total tangible assets is, we are taking only what? We are taking the value of A only. Fine, we are taking the value of A only. Then what will happen? 350 loss, this is very critical, very crucial. 350 loss should be divided, should be distributed, not divided. This should be distributed between land and buildings and machinery based on the individual value, so that we are not going to have impact on one asset. We are distributing the loss proportionately. This concept is called as a pro rata basis. And subsequently what will happen? We will take into consideration what is the impairment loss? 125 for the machinery, 225 for the land. Definitely the value of, there will not be any brand, there will not be any goodwill. Is it right? There is no impairment for other assets. Other assets is remaining the same 120. If you take into consideration, the recoverable amount will be how much? The recoverable amount will be how much? 1001. Are you clear about this?
Yes, it's clear.
Is it? It takes time. Okay. Initially, see, I am telling you this. In the first stage, first 2-3 steps, first step, you will find little bit what's happening. But the moment you go further, by the time we reach the answer, then we see how the sequence is working out. Fine. This is with respect to what? This is with respect to the concepts. Now, what I will do? I will going to do the exercises. Okay. I will do the exercises based on that. The same exercises what is given. Okay. I will not do anything. The same exercises related to the ones. Is it right? Where is that? 1 minute, I will delete this one. Fine. Can I start now? Fine. Can I start now, please? Yes. Yes, Rizwan, where are you? Fine. Is that? See, they have given you three assets. See the things. Carrying amount, value in use. Is it right? Carrying amount, value in is for carrying amount, net realizable value, and value in use. Is it right? Now, whenever we say recoverable amount, how much we are going to recoverable, means when we say it is a recoverable amount at the time of sale. Is it right? At the time of sale. Now, I am putting this very clearly. Is that recoverable amount? Is that recoverable amount? Tell me, what is the recoverable amount for the asset A? What is the recoverable amount of asset A? How much is the carrying amount? See the things. Okay. See, carrying amount, see, the condition says, is it right? The condition says, the rule says, is it right? I can say, the rule says that whichever is highest, net realizable value or value in use. Is that net realizable value or value in use, whichever is higher. Whichever is higher. Is it right? Now, if you take into consideration carrying amount is how much? 100. Net realizable value is how much? 110. Value in use is how much? 120. If you continue the product, is it right? If you continue the product, which is higher? If you compare these two, is it right? If you compare these two, the recoverable amount will be what? The recoverable amount is value in use. Is it right? Value in use. How much is the value in use? It is how much? It is 120. Fine. Whichever is higher. Okay. If you take asset B, again we are talking in terms of value in use. Is it right? How much is there? How much we can recover it? We can recover it how much? 110. Is that? If you take into consideration the third one, the asset C, which one is the net realizable value is how much? Net realizable is 100. Value is how much? Is 90. You have an asset where you are going to say that it is 90 reals. Is it right? If you sell it, you will get how much? 100 reals. Got my point? If you use it, you will get 90 reals. If you are going to sell it, you will get how much? 100 reals. Then what you will do? What is your recoverable amount? Your recoverable amount will be 90 or your recoverable amount will be 100? 100. Is it right? This is what net real. Understand what? Very simple. Is it? See, you have an asset with 90, but if you sell it, you will get 100. Is it right? Means how much you can recover? You can recover 100. Is it right? Now, what they are asking us? They are asking us, the second part is they are asking us the impairment loss. What is the condition of impairment loss? The rule says that carrying amount, is it right? Carrying amount should be more than the value in use. Is it right? Yes. Is it value in use? Is that value in use, or in extreme cases net real? What condition we have used here? Is that what condition we have used here? The same condition we have to use there. Is that the same condition we have to use there? Fine. Now what it says, how much the carrying amount here? See, carrying amount is less, is it right? There is no loss is there, is it right? There is no loss is there. Impairment loss, is that the impairment loss is 0 because what's happening is 100, is it right? It is 100, fine. It is, if you take into consideration where I will write it with another pen, is it right? It is going to be 100. 100 is less than, is it right? Is less than how much? If you take the both the conditions also, it is less than 120. Impairment loss is 0. Is it right? Impairment loss is 0. Now, here what's happening? The carrying amount is 150. Is it right? The carrying amount is 150. It is greater than value in use. How much is value in use? 130. The impairment loss is how much? The impairment loss is, the impairment loss is 20. Is that the impairment loss is how much? The impairment loss is 20. Fine. Next here. How much we are taking? Here the carrying amount is how much? The carrying amount is 120. Is that? It is greater. It is greater than how much? It is greater than, what is the net realizable value? Net realizable value is 100. Is that? What is the impairment loss? Impairment loss is 20. Whichever amount we are taking as a recoverable amount, is it right? Recoverable amount. That recoverable amount we have to take into consideration for the impairment. Fine? That we have to take into consideration for impairment asset. Is it clear?
Yes, it's clear.
Next. Okay? No. Yeah? Slowly, we go. An entity owns a car. That was, we have done this. Is it? Again we are doing that. Is it right? We have done this. Again we are doing. I think we have done in the lecture, I think so. Okay? Fine, no problem. An entity owns a car which it was the accident. It barely used. So the value is estimated is how much? The value is estimated. Is it? The value is estimated how much? The value is estimated for 1000. Is it right? The value is estimated for 1000. Fine. How much is the car is a classic and there is a demand for part. The result of the fair value is how much? How much is the fair value? Solution. Is it? How much is the fair value? Fair value is 3000. Okay. The fair value is 3000. The opening carrying amount is 8000 and car has estimated life of 8 years. We have done the same thing. No problem. Again we will repeat. Okay. Again we will repeat. Nothing will happen. Is that? Fair value is 3000. So is that? What is the value in use? Value in use is how much? Value is in use is 1000. Means at least you are disposing of the car. You will get some. The results in the fair value less cost to sell is how much? 1000. So the value in use is how much? The value is used. If you are continuing the car, it is value is 1000. If you sell the car, is it right? If you sell the car, how much you will get? You are getting how much? 3000. Is it right? If you sell the car, how much you are getting? 3000. Now, this is the basic information. Fine. What we have to do is we have to know what is the carrying amount brought forward. Is it? What is the value of the car? Is it? Value of the car is how much? Opening carrying amount. Opening carrying amount is how much? It is 8000. Is it right? Next, you have to deduct depreciation for 1 year. Is there depreciation for 1 year? 8000 divided by 8 years. Is it right? It comes to how much? It comes to 1000. Is it right? It comes to 7000. Is that it comes to how much? 7,000. Now, what is the fair value? This is the carrying amount. Is it right? Carrying amount at the end of the year. Is it right? At the end of the year. Is a carrying amount at the end of the year. Now, what if they are going to sell it off? Is it right? If they are going to sell the car, is it right? Cost to sell, is it right? If you are going cost to sell, is it right? How much we are going to sell? We are selling it for how much? 3,000. It comes to how much? 4,000. This is called as impairment loss. Means first we have to take the carrying net value minus the sale value. Net value minus the sale value, difference is going to be the impairment loss as such. Is it okay? Is it clear?
Yes, it's clear.
Yeah. Next. An entity owns a property revalued at how much? An entity owns a property, revaluation is how much? Revaluation is how much? Revaluation is 500,000. Fine. As on 31st March 2003. How much is the revaluation gain they are getting? They are getting a revaluation gain of how much? Revaluation gain is how much? Revaluation gain is 200,000. Recognized as a OCI. Okay, this is recognized as a other comprehensive income and recorded in the revaluation. As on 31st March, is it right? As on 31st March 2005, is it right? 2 years. Is it right? Is it right? 31st March 2005 means 2004, 2005. Is that very important? Immediately you write for how many years? Is it right? It is 2 years. Is right? The carrying amount is how much? The carrying amount is 460. Is it right? And the recoverable the recoverable amount of property is how much? The recoverable amount is how much? The recoverable amount is 200,000. How much is the impairment? Tell me how much is the impairment?
Uh, 260.
Is it?
Thousand?
Yes. Yes, exactly. Okay. Impairment is nothing but carrying amount. Is it right? Carrying amount. Is it right? We put like this. Again, why we have to write all those things? You don't need. Is it right? You don't need. Is it right? This is A. This is B. Okay. This is A. Impairment is A minus B. Okay. It comes to how much? 260. Is that impairment is how much? 260. Fine. Okay. I'm not using debit and credit right now. Just we'll go further and we'll see what is the debits and credits. Okay. How it has to be debited and how it has to be credited as such. Is right? How much is the recoverable amount? Recoverable amount is 200. Loss is how much? Loss is 60. Okay. Loss is, see, recoverable amount is how much? Recoverable amount is little bit. Recoverable amount is 200. Is that? Net loss is how much? Net loss is 60. Is that? Just keep this one. We will say how you have to be treated in the income statement as such. How they are said. what is the impairment and how this to be treated in the financial statements. What you will say how it is going to be treated in the financial statements is that fine. See the things. Make it a point. Whenever there is a surplus, is it right? Whenever there is a surplus, what we will do? We will credit income statement. Is that right? Whenever there is a surplus, we will credit income statement. Is that? Now, whenever there is a loss, is that what we will do? We will debit what? We debit income statement. How much is we are going to debit it? Debit it by 200,000. Is it right? Debit it by how much? 200,000. Next, how much is the debit all expenses and losses? Is it? What is the net loss? Net loss is going to be how much? Net loss is going to be 60,000. Is it? Net loss is going to be how much? Means if it is when we do the things, whenever there here we use the word revaluation surplus. Here also what we are doing, we are using the same thing. When it is a income, revaluation gain, we will credit. When there is a revaluation loss, we will debit it. Is it right? This is nothing but revaluation loss. Is it? Revaluation loss. That is the reason we are making it what? We are making it debit. Debit all expenses and losses. Is it right? How much is there? It is going to be 60,000. Fine. Definitely. What we are doing in terms of credit, we credit whatever they say the carrying amount, the asset. Is it right? How much is the? We will say it is in terms of property. How much? To 60,000. Are you clear about this? Make it a point. This little bit you focus on this. Is it right? How the debits and credits will be worked it out. Okay? Are you clear about this? First we have to say how much is the impairment loss. Subsequently we have to take into consideration what is how it has to be treated. Fine? Next. Can I go to the next one? Boxer purchase, is it right? Is it right? Boxer purchased a non-current asset for how much? 30,000. Is it right? They have purchased a non-current asset for how much? 30,000. Yes. Yeah. Is it right? They have purchased a non-current asset, how much? 30,000. At that date, the asset was estimated is how many life? 10 years. Is it? Boxer doesn't revalue this type of asset, but accounts it for the basis of depreciated historical cost. Is that? We are talking about on the based on the depreciation historical cost. As on 31st December 2002, after 2 years, is it right? After 2 years. The asset is subjected to the impairment with a recoverable amount is how much? 16,000. Fine. Now, this is what happens in 2002. Now, after at December 30, 2005, is it right? December 2000 means 2003, 2004, 2005. It is after how many years? After 3 years. The circumstances which cause that the original impairment has reversed. Is it right? Value of the asset has been increased. Is it right? Value of asset has been increased. Here what's happening? here the value of asset has been decreased. Is that value once in the first 2 years the value of the asset has been decreased. In the next 3 years the value of the asset is how much is the recoverable amount? The recoverable amount is 40,000. Is that recoverable amount is how much? 40,000. Now you have to make it a point. Is it right? First you have to take into first what you have to do? We have to take it for 2003. Is it right? 2002. Okay. From 2000, 2001 to 2002 we have to take it for how many years? 2 years. Next from 2003 till 2005 we have to take it for how many years? We have to take it for 3 years. Fine. We have to take it for 3 years. Now ultimately in the end what we have to do? We have 3 steps. Is it right? We have to take from 2001 to 2005. Is that this is the same thing? What? This is the step 1. This is the step 2. Is it right? This is the step 3. Is that this is for how many years? This is for 5 years. If you remember in the lecture we have done the same thing. Is it right? We have done the same thing. Okay? Are you clear about this? I'm going to start now. Okay? The first one, we what we'll do? We do the step 1. Is it right? We do the step 1. Now, year end value. Is it right? Year end value. Year end 31st December 2002. Is it right? How much is there? 31st December 2002. They have mentioned it. Is it right? They have not mentioned in 1 minute. 1 minute. Fine. Is that? Now, what is the historical cost? What is his historical cost? Historical cost 1 January 2001. Is it right? How much is the historical cost? 30,000. Fine. First we will say what is the revaluation gain loss. Then we will say what is the revaluation gain. First year we have talked about that. Next. Is it right? Now less depreciation. For how many years? For 2 years. Is it right? Depreciation for 2 years. 30,000. Is that 30,000 into how many years? 2 by 10. How much we will get?
6,000.
6,000. This is the carrying amount. Carrying amount on December 2002. Is it right? Now, recoverable amount is how much? Recoverable amount. Is it right? They have mentioned recoverable amount. How much is the recoverable amount as on 31st December 2002? Recoverable amount is how much? 16,000. Is it right? Recoverable amount is how much? 16,000. Difference is how much? 8,000. This 8,000 is called as impairment loss. Is that this is as impairment loss. Right? Now, is that when we say it's a impairment loss? Is that when we say it is a impairment loss? It has to be what happens. See, that's what it says. Debit is what? Debit will be the income statement. Is it right? Debit will be the income statement. How much? 8,000. Is it right? Is it? Debit will be the income statement. How much? 8,000. Is it right? And depreciation is how much? Is it debit will be the impairment loss is 8,000. Fine. How much we have to make sure? Is it right? Debit will be 8,000. Is it income statement? Is it fine? Credit will be how much? What is the value of the asset? Value of the asset is going to be how much? Value of the asset is going to be 16,000. Is it right? You have the depreciation also. Is it right? Depreciation for the current year, plus each year. Is it right? Each year. How much is the current year for the past year? Is it right? Sorry. No. 1 minute. Is it right? Is it? How much is the depreciation? Depreciation is how much we have calculated depreciation. We have calculated depreciation for 6,000. Is it right? We have calculated depreciation for, and every year how much we calculate depreciation? 2,000. Is it right? How much is the depreciation? Depreciation is going to be 8,000. Is it? Debits will be 16,000 and credits will be 16. This credit is nothing but the decrease. Is it right? This is what it says, decrease in the value of asset. Is it right? Decrease in the value of asset. Fine. This is the step 1. Step 2. Fine. Step 2. Now what happens? We are working on what? We are working on 31st December 2005. Okay. Remaining life. Is that very important? Remaining life. Is it right? Remaining life is how many? How many years are there remaining life? It has to be 10 minus 2. It comes to how many years? 8 years. Is it right? Now, same thing we have to take. What is the carrying amount? Is it right? Carrying amount. They have mentioned carrying amount. Is it right? Carrying amount as at 31st December 2002 is how much? What is the recoverable amount? Is it right? What is the recoverable amount in terms of that? Is it right? The recoverable amount is it's nothing but the recoverable amount. Is it right? We will show the value of the asset. Is it right? We show the value of the asset. How much is there? 16,000. Fine. 16,000. Now you are going to calculate the depreciation on that. Is it right? You are calculating depreciation on that. How much is the depreciation? 16,000. Is it right? 16,000. For how many years? For how many years? For is it right? Depreciation less depreciation. Is it right? Less depreciation. For how many years we will calculate depreciation?
For 8 years.
8 years. And for how many years has been lapsed? How many years has been lapsed?
2 years.
How 2 years? How 2 years? How many years we have mentioned here? How many years we have mentioned here?
3 years.
In step 2, how many years we have mentioned?
3 years.
3 years. Is it right? How many? Means 16,000. Is it right? 16,000 into 3 by 8. How much we will get?
6,000.
6,000. Carrying amount at 31st December 2005. How much is the recoverable amount? They have mentioned, see the things. The recoverable amount is how much? 40,000. Okay. How much is the recoverable amount? They have mentioned here. The recoverable amount is how much? The recoverable amount is how much? 40,000. Fine. Is that recoverable amount is 40,000? Is it less recoverable amount? Recoverable amount. How much is the recoverable amount? 40,000. I will not put less. I will put difference. Is it right? Recoverable amount. How much is it? Are we getting positive difference or we are getting positive? Is it right? We are getting positive. How much we are getting positive? 30 means impairment loss is there. It is not impairment. It is a revaluation surplus. Is it right? The impairment loss is 0. Is that impairment loss is 0? There is no impairment loss. Is it right? First we have in the first case we got loss. In the second case we got revaluation surplus. Is it right? It is no impairment loss. Is that? This is what we see. What is the most important thing we have to do? Just I will explain you. In the first, we are not going to do anything. We are just making a point that how much we will arrive at the figure. 30,000 in the step 1, 30,000 is the cost. 2 years we have taken the depreciation. Recoverable amount we will say, definitely the carrying amount is more, the recoverable amount is less. Impairment loss is 8,000. Second stage is at 3 years from 2002 to 2005. The carrying amount is how much? 16,000. Is it right? We have to calculate depreciation for 3 years. Is it right? For the remaining life, 3 by 8, 6,000. We got the carrying amount. When we say it's a recoverable amount is more. Is it right? Recoverable amount is more, carrying amount is less. Then we will not have any impairment loss as such. Okay, we don't have any impairment loss as such. Is that in the third stage, what we have to do? See the thing. In the third stage, what we have to do? We have to take it for how many years? We have to take it for 5 years. From the beginning till the end. Is that from the beginning till the end we have to take it for the 5 years. Fine. Now, are you understanding what's happening?
Yes.
Is it right? In the step 3. Is it right? Step 3. How much is the historic cost? Cost as on 1/1/2001. Is it right? How much is the cost? 30,000. Is it depreciation? Is it depreciation for how many years? From 1/1/2001 to 31st December 2005, 5 years. Is it right? For 5 years. How much? 30,000 into 5 by 10. Is it right? How much we'll get? 15,000. What we have done in the lecture, the same process we are doing here. Is that the same process is we are doing here? How much is there? It is 15,000. This is the historical cost. Historical cost as on 31st December 2005. Okay. Now, is that historical cost as well? Now, how much we got? In the previous case? Is it right? In the previous case, how much is the impairment loss? Impairment loss is 8,000. Fine. No. Okay, see the things. When we do the things, is it right? This we have done where? This we have done for 31st December 2005. Okay. This we have done for 31st December 2000. 31st December 2005. How much is there? 31st. See, as on 31st December 2005. Is it right? As on 31st December 2005. What is the carrying amount? 10,000. Fine. But as per the historical cost, this is also we are doing on when? This is also we are doing on 31st December 2005. We have to compare the values of 31st December 2005. Is it right? The 31st December 2005, the value is how much? 15,000. Is it right? The historical cost as well. Now, how much is the impaired value? That's what it says. How much the value has been decreased as on 31st December. Is it right? As on 31st December, how much value has been decreased? Can you tell me?
Increased by 5,000.
How much?
5,000.
Anything else? Rizwan, how much?
Can you repeat again your question?
Now, how much is the historical cost? Historical cost is how much? Historical cost is 31st December 2005 is how much? 15,000. Fine. Is that without any revaluations? Without any revaluations, without anything, the value is how much? 15,000. Okay. Now, if you take all the considerations, is it right? If we take all the considerations, what will happen? First, what we did, we have taken the impairment loss, then we have taken the revaluation, then we got some profits. Is it right? Some we got. What is the, how much we got? The profits as such, revaluation surplus, how much we got it? Revaluation surplus, how much we got it? 30,000. Fine. Now, when you take into consideration these two things, what is the, how much is the impairment has been carried out?
$22,000.
How 22?
37,000.
Tell me numbers. Tell me how you got 22.
So I got 37, like 15,000.
No, I'm just reducing the overview about it. Is it right? Now, tell me how you got.
I subtract 15,000 minus impairment
How
loss
much is
plus
the value of the asset increased? How much is the value of the asset increased? Value of asset increased.
It increased by
30,000.
15,000.
By how much?
15,000.
How much the value of the asset increased? By, now see the things. Carrying amount is how much? Listen, is it right? I just want to make, is that carrying amount, how much the value? Carrying amount as on 2005, I am giving you this one. Carrying amount will be how much? 10,000. Is it right? Carrying amount is how much? 10,000. What is the historical cost? Assume this is 0.1. Is it right? This is 0.2. Is it right? This is 0.2. Is it right? How much is the, his 0.1 is how much? Value increased by how much? This. Historical cost. As per historical cost, what is the value? Value is how much? As per the historical cost of 2 The value is how much? 15,000. The difference of how much? The difference of 5,000 is increased. Is that? That if you take the carrying amount in the second stage, see the things. You have the closing up. See, very simple, very clear. Little bit, is that? We have this here. 16,000 is there. 2002 December, it is 16,000. Fine. We have calculated depreciation for 3 years, 6,000. What is the value you got it on 31st December 2005? 31st December 2005 value of the asset is how much? This is 31st December 2005. This is 31st December 2005. Is that? There are two different values. Is that? The value as on 31st December 2005 after 5 years is going to be how much? 15,000. But actually we are showing how much? We are showing only 10,000. If we are showing 10,000, the difference of 5,000 is nothing but increase in asset value. Is it? Increase in asset value. Understand my point? Please, this is what it says. Again, I will tell you. The value of the asset as on 31st December is how much? 10,000. Okay? 16,000 minus 6,000, 3 years depreciation, 10,000. Now, we have going for the 5 years straight away as per the historical cost. How much the value is coming? We are coming the value of 15,000. As per the revaluation, the value is less. As per the historical cost, the value is more. Got my point? As per the historical cost. Now what happens? You make it the valuation. Is it? The valuation, if you go it, the value of the asset is more by how much? The value of the asset is 5,000. Now this 5,000 is going to be reversed. If there is a loss, is it right? If loss, what we'll do? We'll debit the income statement. Is it right? If there is a gain or increase in value, what we will do? We will credit what? We will credit the revaluation surplus. How much we are doing a reversal? That's what it says. Is that? I'm here writing how much we are doing reversal. Where is that? Is it? How much we are doing reversal? We are doing a reversal of how much? Reversal of 5,000. Is it right? See, very simple. Just 1 minute. Okay. How we are doing from the beginning. Okay. How we are doing from the beginning. Step 1. 30,000 is the value of the asset. 2 years we have taken the depreciation. 24,000. Got my point? Recoverable amount as of 34. What is the value? Actual value will be how? If we are going to recover it, it's only 16,000. Fine. 24,000 is the value of the asset. Recovering is 16,000. Loss is how much? 8,000. Now, next, when we start the next year, 2003, we have to start with the latest value. What is the latest value? Latest value is 16,000. Okay. Latest value is 16,000. Depreciation for 3 years. For the remaining life of 8 years. We'll take the depreciation is 6,000. Fine. The value as on 31st December is how much? 31st December is 10,000. Fine. Recoverable amount is how much? Recoverable amount is 40,000. Fine. How much you got it surplus? 13,000. Now, this is what is the revaluation surplus as per things. Now, what is the cost of the asset? Is it right? Cost of the asset is how much? Cost of the asset is 30,000. The depreciation for how many years? 5 years is how much? 15,000. Fine. Now, if you take into consideration this also, is it right? If they take into consideration this also, how much is going to happen? The revaluation surplus is 30,000, is it right? And the actual amount as on historical cost is 15,000. There is a book value as on 31st December is 15,000. Okay. Now, how much we are going to incur losses? That's very important. Is that if you take into consideration, is it right? Or you can put like this also. Or is it right? If you take that into consideration, or is it right? Or what is the revaluation gain? Revaluation gain is how much? Total revaluation gain. Is it right? What is the amount we are going to have? It is going to be 15,000. Is it right? Next, how much we are going to have? The carrying amount is how much? Carrying amount is how much? Carrying amount is how much? As on 31st December. Is it right? Step 2. Is it right? Step 2. Carrying amount is how much? 10,000. What is the difference? Difference is 5,000. This is nothing but the gain. If it is a gain, you have to do the reverse. Against. Is it right? Against the same one. Against the OCI, other comprehensive income, or revaluation surplus. Are you clear? Your silence gives me a doubt. Okay. If you are understanding, your response is very, very fast. If you are not responding, you will have a delay response. Is it? You have a delay response. Is it clear?
Yes, it's clear.
Little bit not clear. I can understand your voice. Don't worry about that. Little is not that much clear. Is it right? I can sense your voice. Okay. I can sense your voice. Don't worry about that. I am here. Okay. Now we will do this and we'll stop. Okay, or we'll stop here. First tell me. We can do and we can stop. Fine. Okay, no problem. Okay, no problem. Fine. Tomorrow we'll complete this. Is that we will complete. Okay. I will just recap it what we have done. Is it right? What we have done today is in the first case we are talking in terms of the same thing. Is right? If there is a loss, how we have to distribute the loss among different assets on a pro rata basis. Is that on a pro rata basis? That's what we have made it clear here. Is it right? That we have done here. Is that we are going to distribute the loss on the where is that? 1 minute. 1 minute. I want to recollect what we have done in the is it is if there is cash reversal of the loss. See, here also we have done the same thing. If you see the screen, is that example 3? Is that example 3? We have done the same. Step 1, step 2 and step 3. Is that we have not done anything else. First what we have done, we have taken the the historic, when there is a loss, it is a step 1. When there is a gain, that is the step 2. And the last one is how you have to be treated. Is it right? Example 3. Example 3 and the one which I have done now, both are same. Okay, there is no difference on that. Just you just revise it and you see this video. Inshallah, it will be more clear for you. Okay, we have done how there is a impairment reversal and what is the cash generated units. Okay, cash generated, how you have to distribute the impairment loss among the tangible assets as such. Is it right? That is the first thing we have done. In the second case, is it right? In the second case, is that, where is that? Where it happened when mama. Is that in the second case what we have done? First we have calculated the recoverable amount, whichever is higher. Based on that we have calculated the impairment loss. Is it right? Next, subsequently we have done this, the same question we have done about the loss, how we have to see. The most important thing is we should be clear that we have to calculate any depreciations. After depreciation, then only we have to take the difference. Okay, we have to take the difference. Here also we are talking about the what is the loss we got it from the property. Carrying amount is 460, recoverable amount is 200, and the impairment loss is 260. This 260 has to be divided. Is it right? How much you have? If there is a revaluation gain, we credit it. If there is a revaluation loss, we will debit it. Proportionately, correspondingly, we should, the most important thing is we should not mix up the accounts. Okay, if there is a gain, if it is a gain, we will credit which account? We credit revaluation surplus. Is it right? Revaluation. If there is a loss, or if there is a loss, we should not touch other accounts. Is it right? We have to debit what? We have to debit the revaluation surplus account only. Is it right? This is the only basic principle. If we are clear about this, subsequently other things will be fine. Okay, we'll stop here. Inshallah, tomorrow when we will come back about tomorrow when we are meeting.
8:30.
Inshallah, when you are meeting at 8:30, we will complete this. Before, just take your time. Just take your time and revise this. Okay, from next week onwards, inshallah, I will tell you in advance. From next week onwards, we will have the every week we will have a quiz, online quiz. Okay, every week we will have a online quiz for section A and section B. Section A 10 questions, section B 10 questions. I will tell you in which lecture it will be there. First we will do two lectures only. The next week you revise it, lecture 1 and lecture 2, and based on that we will have quiz, inshallah.